Today is Wednesday, April 10th, and as of today, Nvdia is the Investor Business Daily Stock of the Day, and here's how I am playing this news. Hello everybody, Jim Malone here with Dallas Trading Floor. Well, it looks like Nvdia may have pulled back and is now making a bounce higher. What I did today is I put on a trade on Nvdia. It's an options trade. It's called a bull put spread, and it's a credit trade. So when we enter the trade, we get a credit, and then when we close it, it's going to cost us some money to close it, and hopefully we'll close it for less money than we got on the original credit. But I want to show you this trade that I'm making on Nvdia. Yesterday, Nvdia came down, and it looks like it has bounced here. Today is Wednesday. It was Tuesday yesterday when it came to its low. The way Nvdia has been trading is since the breakout at 505, this was back here in January, it's steadily moved up. It's had a few little hiccups, but it's steadily moved up, and it made its high basically right here in the early part of March, and the high was 947. Then it came down and up. This is the cup. And then it came right back up to the 947 area, and then it moved down. This is the cup, and then it looks as if it is getting support basically right here at the 50-day line, and that's where it bounced today. So can we tell long term if this is going to continue up? We don't know, but it does look like we're getting some very strong action on Nvdia. Now, when I did this trade originally, it was trading at 864. It started off the trade today at about 840. It's currently at 868.32. And as you can see, it's up about 1.72%. Now, we're doing this on Nvdia. Why? Because it's an extremely strong stock, and it has a very high composite rating of 99. So this is really the leader. It's also very, very liquid. That's one of the things when you're doing these option trades, you want to make sure that it's very liquid. It's very liquid, and that's definitely the case here for Nvdia. When I entered the trade this morning, what I did is I sold 3 contracts of the May 17th 810 put. I received a price of $21.83 for each of these contracts, or a total of $65.49. That's what I received. But I simultaneously bought the 800 put, the May 17th 800 put, 3 contracts for $18.75. So this cost me $5,625. So if you net them together, my credit here, this is what was put into my account. Well, you might want to ask, what is a bull put spread? Well, basically, a bull put spread consists of 2 put options. First, the investor buys the put option that pays the premium. This is buying it, and then simultaneously we sell a higher option, which the strike price is higher, and that is sold for a premium. So the net of this, because this is a credit bull put spread, is going to be higher. So the net of this in this case is 924. So that is the difference between the puts that we bought and we sold. So here's the interesting thing: they both have the same expiration date. That's May 17th. So since puts lose value as the underlying stock, that's Nvdia, increases, both options potentially will expire worthless if Nvdia stays above 810 by the expiry of the option period. The profit chart for this particular trade, you'll notice there's a dotted line down here, and of course this is 807. So this is the break-even point, and the break-even would be if we were to hold this all the way until the expiry, which would be May 17th. Now, of course, we wouldn't do that. We would close early if we saw that this trade was not going to work. Now, remember, when we open the trade, we get the premium. In this case, $9.24. We get that, and so it's going to cost us money to potentially close the trade early. That's what these numbers here are all about. So let's say if, for instance, the price of Nvidia were to drop to say $8.49, well, we would have to close that early, and that might cost us $102 in this particular case. Now, what's great about this is called the options profit calculator. This shows us exactly how to close it. So I'm putting the address here. This is my actual trade, and you can do the trade as well. But this is the if you click on this link, it'll bring you over to the options profit calculator, which will show you how to close the potential trade. So we're going to close early if the price of Nvidia goes down, but we're going to keep it open as long as we can, and hopefully it goes all the way to the end. If it goes all the way to the end, of course, we're going to collect on the 17th. We're basically, both options are going to expire worthless, and we're going to keep the credit that we received when we enter this trade. So this is kind of how it works. Now, currently, when I opened the trade, the price of Nvidia had bounced and was at $864.79. So basically what happened again is that we broke out at 505. That was in the beginning of January. We came all the way up to here where it was 945, and then we made this cup formation, and then we pulled down, and then we've been pulling back on this cup, and then we reached almost exactly to the 50-day moving average, and that's where we bounced, and we bounced today. So that may be a good indication that Nvidia is moving higher. And if Nvidia does move higher, this trade should work well. I just want to be upfront here. Remember that options trades can be risky, and investors can lose 100% of their investment. So be very, very careful here. This article basically is just for educational purposes only and is not a trade recognition. Remember, always do your own due diligence and consult with a financial advisor before making any investment decisions. Now, what's great here is that what you can do is follow along with me, but with not using money. Kind of paper trade this one to get comfortable with doing these bull put spreads. Just want to go back to the estimated return on this particular trade. We received the entry credit, $924, and the maximum risk on this one, $2,076. And this is if at the expiry Nvidia is below $799.98. Now, of course, we're going to close this earlier, hopefully, if the trade is working against us. But that is the maximum that we can lose on this one. The maximum return is, of course, the entry credit, which is $924. And, of course, that was 44.5% of the potential risk here. So if we were able to do this and hold it all the way to the end, we would be getting a 428% per annum on this trade. So that's pretty darn good. The break even here, of course, 806.91, or basically 807. And the probability of profit on this one, about 69.2%. So kind of a good trade, I think. And hopefully I'll be updating you on the progress of this as we go forward. If you like this kind of thing and would like to join Dallas Trading Force, super easy to do. All you have to do is take a picture of this QR code to my right, and you'll be taken directly to the sign-up page. And of course, this is free. And we also have a Discord room where we talk about trades basically in the first 2 or 3 hours of trading. So hope to see you back here again. I'm going to try to put out updates on this trade if it's going well. So stay tuned to Dallas Trading Floor to see how I'm doing on this trade. Again, hope to see you back here again, and please, if you like, join Dallas Trading Floor. It's free, and of course, all you have to do is use the QR code to the right. Happy trading!